I mean, what a day, Grasso. I'm just gonna start right there. Do you think that this, I know we're not all policy experts here, but was this at all sort of strategic, an attempt to lob out the idea, see how markets reacted, and then take it from there?
He's done that before. I think he is good at doing that. That's part of his strategy. I don't think that the term is up in May 2026. So I don't think he would waste that. And then Philip Jefferson would take over, and Philip Jefferson was appointed as the co-chair, as the vice chair by Biden. So he's not going to get the wanted result. If you can't get the wanted result, why do it? So I think he is just floating it out there. The Supreme Court said he can't do it. So why? I think this is all ado about nothing, much ado about nothing. And I think if we did get a sell-off, that would be the greatest buying opportunity of the last couple of weeks. I don't even think we'd get a sell-off. I think the market has moved past this debate between Powell and Trump, and the Fed policy is tight. The Fed says they're tight. So if you look at the 2-year yield, it's 3.9. You look at the Fed funds rate, it's 4.3. They're tight. They should cut at least once. The rest of the central banks around the world, the 4 top central banks were the highest, right? The ECB is at 2. China is at 3. Japan raised rates for the first time in 17 years from a 1/4 point to a 1/2 point. We are at 4.3. We are tight.
What does the rest of the world's interest rates mean?
Because it's a global world, and it's a competitive world, and money flows to the most accommodative spot. That's why.
We don't have the same economy. We don't have the same inflation rates. We don't have the same. I mean, look, I hear what you're saying. I think the more important point is that what is 25 basis points going to do? And I think the more important point is what is the next Fed chair going to be? Because I actually do think that if he was fired, it's a big deal. And I do think it would be more than just a why bother. Equities could shrug. I think markets could shrug. But I think the longer term impact is whoever's the new Fed chair, and whether he's fired or not, is going to cut rates aggressively. And they're going to try yield curve control. And they're going to try to control the long end until they can't. And I think that's really the biggest risk. The biggest risk is not the short end of the curve. The biggest risk is what happens at the long end of the curve. And that probably is not determined for 6 to 12 months or more. So I think there's been a lot of noise. I think Trump's probably happy that there's a lot of noise. And my guess is there's just not a whole lot that really can be done in the near term. If you're a Fed president that Trump puts in or not, yeah, they're going to cut. It's not going to make a big difference.
Karen, in the beginning, we did see markets move, maybe not markedly, but we saw a move down when we got those initial headlines, and we sort of evened back out. So the markets did seem to care to a degree on the rumor.
Yes, they cared to a degree, but I don't think you could look at this as a true trial balloon when we had the trial balloon of the tariffs, right? And we saw the market's violent reaction to that and then the walk back. And so everyone was looking at this and thinking, all right, well, he's just testing and you know, so we didn't really get a true look, I don't think, of how the markets react. I agree with Tim that if he indeed were to try to do this, the markets would react much more dramatically than what we saw today. I do agree with you that the Fed probably should cut, but I don't think it's great politics at all. If you go back to Reagan, who had a Fed, chair who was as aggressive as we have ever seen in the history of the United States, he wasn't happy with it. But, I don't love the out there calling him a moron and, idiot and all of that. I don't think that's helpful. But one thing about, we talk about this administration as crypto-friendly. If you want to see a crypto-friendly administration, fire the chair of the Fed. And you will get crypto moving, for sure. I think part of that has been in the crypto move.
Oh, yeah. You think that's part of the reason?
I do. I've thought that for a little while.
Oh, that's interesting stuff,
I agree with that.
Yeah?
Are you familiar with, you've been to Paris?
I have. It's a great place.
Yeah, no,
Notre Dame, you've been
never heard of it.
Yeah.
Nice rebuild on Notre Dame.
As previously discussed, I love cheese.
Nice
Good cheese.
rebuild.
Nice rebuild.
Yes.
That's a pretty
Louis
big job.
Kind of like what the Yanks have done in the Bronx.
How much do you think that rebuild fell down? Got burned down.
I understand.
It cost less than $1 billion. Why do I bring it up? Apparently, the president is saying that this Fed chair spent over $2 billion. I just heard Megyn say this.
Right.
Which is virtually impossible, number one. But he's floating it out there because I do believe he's trying to come up with some reason. The only way they can be fired is for cause. And in his mind, in this administration mind, that would be the cause. I do actually think he's going to give it a shot, and I think it's going to happen.
Give it a shot, meaning try to fire him. Okay.
Over the weekend. And, he's going to wait until Friday or Saturday because that's typically when people wait for these things. Danny Moses calls them the Friday night dirties, and I think there's a real possibility of that happening. I don't think it's particularly bullish, and I will say this. The dollar today didn't think it was particularly bullish either because although the bond market recovered, there is still considerable pressure on the U.S. dollar, which, by the way, may be the goal in the first place, because when you're in a $37 trillion hole sitting on top of a $27 trillion economy, you're not going to grow your way out. You're going to sort of devalue your currency your way out.